Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global markets. I'm your host, Louie, and we're excited to have you join us today. We've got a packed show for you with all the latest news and analysis from the financial sector. First up, let's take a look at the ongoing trade tensions between the U.S. and its major trading partners. We've seen some significant developments in recent days, with Japan securing a trade agreement with the U.S. that includes reduced tariffs. But what about other countries like India and South Korea? Will they be able to negotiate similar deals, or will they face higher tariffs? According to Peter Cardillo, chief market economist at Spartan Capital Securities, the U.S.-EU trade deal could be the next big catalyst for global markets. He believes that the market has priced in a 15% tariff imposition as the norm, and that India may be waiting for a better deal. But with Trump making it clear that this is the starting point, will India be able to negotiate a more favorable agreement? We'll be keeping a close eye on these developments and exploring what they mean for investors and traders. It's a complex and ever-changing landscape, and we're here to help you navigate it. In other news, the S&P 500 and Nasdaq are sitting at record high levels, with the market responding to positive earnings reports and trade deals. But can this rally continue, or are there risks on the horizon? We'll be discussing these questions and more in the coming segments. For now, let's take a step back and look at the bigger picture. The global economy is facing numerous challenges, from trade tensions to geopolitical uncertainty. But there are also opportunities for growth and investment, particularly in emerging markets. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and investments where market trends can shift in an instant. Today, we're exploring two interesting stories that caught our attention. First, let's take a look at what legendary investor Jim Rogers has to say about the current state of the markets. In a recent interview, Rogers expressed his concerns about the global economy, stating that we're on the verge of a major downturn. He believes that investors should be cautious and prepared for the worst. However, it's essential to note that Rogers has been known for his bearish views in the past, so it's crucial to consider multiple perspectives before making any investment decision. On the other hand, we have Sneha Seth, a financial expert who shared her insights on the current market trends. She highlighted the opportunities in the pharma sector, particularly in stocks like Dr. Reddy's, which has been showing signs of support near its 20-day moving average and 89 MA on the daily chart. Seth also recommended a sell call on IndusInd Bank, citing that the stock has broken key support zones and follow-up selling looks likely. It's fascinating to see how different experts can have varying views on the market. While Rogers is warning of an impending downturn, Seth is finding opportunities in specific sectors and stocks. As investors, it's essential to stay informed, consider multiple perspectives, and make decisions based on our own risk tolerance and investment goals. In conclusion, the world of finance is complex and ever-changing. It's crucial to stay up to date with the latest news and trends, while also being mindful of potential biases and risks. By being aware of these factors, we can make more informed decisions and navigate the markets with confidence. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic conversation so far, exploring the intricacies of risk management and navigating the complex world of finance. As we wrap up today's episode, I'd like to shift our focus to some insightful comments from Ramdeo Agrawal, chairman of Motilal Oswal Group. According to Agrawal, the Indian economy is poised for a pickup in demand, driven by lower credit costs and increased credit flow. He believes that the second half of the year should see an improvement in economic activity, which could lead to a range-bound move in the markets until then. It's essential to note that Agrawal's views are based on his analysis of the current market conditions, and may not reflect the opinions of all experts. Agrawal also highlights the importance of the financial sector, particularly banks, in driving earnings growth. He expects banks to deliver strong profits, which could have a positive impact on aggregate corporate earnings. Additionally, he suggests that consumer companies may see an uptick in growth as the economy picks up steam. It's worth mentioning that Agrawal's comments are not without caveats. He acknowledges that higher interest rates and lower petroleum prices could provide relief to consumers, potentially boosting purchasing power. However, it's crucial to consider multiple perspectives and factors when evaluating market trends and making investment decisions. As we conclude today's Riskwiser Zone, I want to emphasize the importance of staying informed and adapting to changing market conditions. It's essential to approach investing with a critical and nuanced mindset, considering various viewpoints and risk factors. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.